All right, so we're back. Episode 3.
Episode 3
Which
of
is
our unnamed podcast.
Unnamed podcast. Looking for suggestions for that. 3 insane guys screaming at a camera is already taken, apparently, but we're working on that one. But so today we're going to talk about VA loans kind of in depth and just kind of go through the process, not in terms of like an administrative way, but in terms of what you actually need to know to get involved in it. But we have Colin today.
Yeah, we do.
So
person.
Yeah, right. So Colin's my business partner. So it's the two of us, and then Bill, obviously from last time. It's the Three Musketeers here, but we've known each other for like almost 25 years, something like that. Like it's been a long time. And you know, we jumped in together with this in 2023 when you were fresh out of the Army. And obviously with Bill previous to that when you bought your house down in North Carolina.
Bill got me my house.
And so, I mean, both of us have been through the VA loan process with Bill, in fact.
Been through it
Colin
twice.
a couple of times.
So, I mean, let's kind of jump in. So I think everyone knows the basics of that a VA loan is available to veterans.
Yeah.
So is it fair to say that the advantage to a veteran who's able to have a VA loan is you can have 0% down payment without mortgage insurance? That's pretty much the long and short of a VA loan.
Correct.
Okay.
100% financing, no mortgage insurance. You have that, like I said, that funding fee, maybe, because there's a certain level where you have enough disability that the VA actually excludes you from that funding fee.
Gotcha. Now let's talk about this, because I think we can both speak to this from our time in the service, that there's a lot of misconceptions in terms of like how to get a VA loan, where you go. The person you talk to, believe it or not, is not the VA.
No. and I will say, if anybody you talk to tells you that they are the VA, they're a liar McLiar face who's helping you with a loan. The VA does not lend. The VA does not buy loans. The VA does not do loans. All the VA does is that they guarantee the loans. So the VA's job is, if you get a loan and if you default on that loan, meaning you don't make your payments and they take your house, then the VA comes in and they will make the bank whole.
They're essentially acting as your mortgage insurance.
They are acting as your mortgage insurance. Exactly. They're guaranteeing it.
They're lowering the risk profile for the bank.
They're lowering the risk profile. Right. Because what the VA does is they say that we're going to take a 25%. It's as if you do a 0 down VA loan, it's as if you're doing a 25% down conventional loan.
So the VA is guaranteeing 25%.
25%.
Okay. So I didn't actually know that.
They are assuming the risk on behalf of the bank.
Right.
So it makes it more palatable for the bank to accept a no down payment.
Right. Because in the end, so just about in any situation, if you buy a house and you default on the loan and they have to take the house and they go to sell the house, even if they're getting less than what is owed on it, it's probably not 25% less. Right. So that's why you figure, I mean, with conventional loans, that's at 20% where you no longer need mortgage insurance. The VA is going right to 25%. They're saying, hey, listen, now you're only liable for 75% of that value. We'll make you whole for the difference if needed.
Gotcha. So it's a unique benefit to people who are veterans and have enough time in service.
Correct.
Which none of us, I don't think, looked up the specifics on that.
I didn't, and I should know that.
But basically, if you've been active duty for any period of time that's longer than just going to initial entry training,
It might have been 180 days total cumulative.
if you've done an enlistment, chances are you qualify for the VA loan.
Exactly.
99% of circumstances.
And you're an honorable discharge. I mean,
exactly.
I don't think you're qualified if you have a dishonorable. I'm not 100% sure on those details.
Yeah, I think other than honorable or dishonorable, it's removed. But
I think general, it's still.
I think general, you still have it. Yeah.
Yep.
So.
And under almost all circumstances, if you have a rating with the VA, then your funding fee is waived.
Yeah.
Which is important to consider in that.
Exactly. And that's huge, because that's
what
funding 2.15%. That can add up to a lot.
Absolutely.
You know, I have somebody just the other day that I'm talking about refinancing with a VA IRRRL, which we can talk about later too. But to lower their interest rate. I mean, they have us like a $550,000 loan. You know, 2.15%. That's a lot.
Yeah.
Now the refinance rate for an IRRL, which an IRRL is an interest rate reduction, so IRRL loan. It's only 0.5%.
I thought it was a guy named Earl.
Yeah, no, it's a VA Earl. Yeah. My name is Earl, right? No, it's IRRL. It's an interest rate reduction refinance loan. But that's only 0.5%. But even still, 0.5%, that's a lot of money when you're adding up, for a large amount.
We're talking about rates now. There's something important to note. I think it's a general thing. I don't know that this is always, but isn't it pretty typical that VA 30 years is a little bit better than conventional 30 year?
Yeah, VA rates, I mean, any government loan rates are going to be better. So even FHA, USDA will oftentimes be a better interest rate than a conventional loan. But VA rates definitely are going to be generally a better rate. Again, no guarantee. There's all sorts of qualifiers for that, but to generalize it, it's going to be a better interest rate than a conventional loan. So, like I said, all around there's really, I mean, there's a lot in the news with the Veterans Administration and issues with VA hospitals and all other
That's
VA
a whole
benefits.
Separate.
I will tell you that if there's one thing the VA does well, it's mortgages, it's loans. Like the program is a really good program. It's run really well. The people that work at the VA do a really good job making sure that we as the lenders are informed about it. I just think that, and unfortunately, there's a lot of misinformation out there about VA loans, which keeps people from doing them, or not just from doing them, but from accepting them as a seller. A lot of sellers don't want to accept VA loans. There's a stigma with them, and it's unfortunate because it's a great benefit to our veterans, and they should be able to use it without worrying that they're not going to get a house accepted because they're using a VA loan.
I don't think the misconceptions are with the sellers. I think it's with the sellers' agents.
Well, I mean, more than likely, because the sellers probably don't know any difference. But you're right; the listing agents are afraid of them, right? And the fact is that, and this is, I mean, that VA loans have a much lower rate of default. VA loans are actually really, really strong loans.
Tell us where to be and what to do.
Yeah, well, you're right, exactly. Veterans have one thing; they're really good at following directions, right? So you say pay your mortgage, they'll do it.
Yeah,
it's the simple stuff. Sometimes
it's the simple stuff. But I think it comes down to that there's a lot of misconceptions about it, and there's a lot of misconceptions about the process too. Like when you go under contract with a VA loan.
Let's talk about the very beginning of the process, because I hinted at it at the start. The VA is not who's giving you a VA loan.
Correct.
So if you want a VA loan, where do you go? Obviously to Bill, but just in general.
Yeah, I mean, you go come to me. Well, you can go to any lender that does veterans loans, that does VA loans, right? Which is most of them. Yeah, not everybody, but most, I would say, lenders do VA loans. But some do them better than others.
Well, then there's layers, and I think we'll touch on this later. And I know on I think it was episode 2, we basically did a whole ad for New Hampshire housing by accident. But there's layers to these.
Well, there are layers because I can do a VA loan, or I can do a VA loan through a state housing authority like New Hampshire Housing and get an even better interest rate, right? And there's other benefits too, like I can speak to situations like Colin that when I did his loan, I did his VA loan with the New Hampshire Housing Loan Program.
Yep.
It's the same VA loan as any VA loan, but specifically for New Hampshire Housing, it gave him a better interest rate, and it because even though he was not a first-time home buyer, in fact, he owned another property in North Carolina when he moved here to New Hampshire, he was still able to qualify for the program that would otherwise have been a first-time home buyer program because New Hampshire Housing's Home First program waives the first-time home buyer requirement for veterans.
Yeah, that's a big deal.
And I assume that's because they are assuming that if you're moving to New Hampshire, you're coming home and you may have owned a house elsewhere.
Yeah, more than likely.
Yeah,
more than likely, or even you might be PCSing here, and you just need a good loan to buy a house here.
Yeah,
So it's a benefit that New Hampshire Housing does offer for veterans. I mean, we're in Maine right now, and we do a lot of business in Maine too. Maine Housing offers a lower interest rate for veterans, so it's the same program, but if you're a veteran, you get a better interest rate than for a conventional loan or FHA loan buyers.
That's a big deal.
It's a huge deal. I mean, it's like 0.5%. That's a huge difference. I mean, Maine Housing's rates are already pretty darn good, but to lower it even 0.5% more, So there's a lot of options out there for veterans as well through those state housing authority programs. And then, of course, with New Hampshire housing, that veteran can get 100% financing and could access down payment assistance to cover those closing costs.
Exactly.
So you could get $15,000 toward your closing costs, which it's unlikely your closing costs are going to be that high. And if they are, you're buying a pretty good expensive house,
So
right?
it's very likely that with a program like that, you can walk into
You
something.
really
and-
could be at zero down,
Exactly.
zero out of pocket total.
Absolutely. I mean, you're gonna need some cash on hand for earnest
You're still
money
paying for an
deposit,
appraisal, earnest money
inspection.
deposit, inspections, but you can get that money back.
Exactly.
You can actually have it refunded to you at closing.
For really, I didn't realize that piece of it for appraisal and whatnot. That's because that's on.
You can.
Interesting.
Yeah, as long as it's on that closing disclosure, it can be refunded back to you in those funds. As long as there's enough, funding there for it.
See, we talked about this before we sat down to have this conversation, but that's a new thing for me. I didn't know that. I didn't know the appraisal was refundable.
Yeah, the appraisal is definitely all of any funds that you put toward the transaction, you can get back at closing.
Interesting. I mean, that's a big deal.
We mentioned appraisals.
Yeah, that's
I think
appraisals. Well, that's probably the biggest thing with selling agents.
that's the
right?
biggest probably driving factor behind risk to accepting an offer that has a VA loan. And
let's talk about that for a second. So
I have a lot to say.
So the basic framework of where there can be an issue is that for a VA loan, when you have the appraisal, there's an additional essentially checklist that an appraiser is looking for the condition of the property. And they're looking for minimum property condition requirements as set by the VA.
And that's not because they care about the veteran. That's because the asset needs to be protected. They don't care if you don't care that the paint is peeling.
Yep.
They care that if you change your name and move to the moon, that the property's not going to degrade beyond the point where it can be.
I like to think that the VA put these in there so that the veterans are in safe houses.
One of the biggest things I personally run into, and I'm sure Orion will speak the same, is that people will be like, I don't care. I'm going to repaint the deck anyway. They don't care about the deck for your sake.
Yep.
They don't care if you care about it. It's for the property.
The minimum conditions and the issues that we run into them with are usually it's silliness. And we can really speak to this because we've all bumped into it multiple times. The biggest thing in New England, 100% of the time, is in the exact wording of it in the guideline is chipping, peeling, or flaking paint. That is
especially if the house was built prior to 1978.
Yes,
because then they're mostly worried about lead,
and it is a huge deal. If there is paint that is in that condition that's noticeable, it's going to get flagged on the appraisal, and it's going to be required to be fixed prior to closing. Unless we are absolutely in the dead of winter, and then there's other options that we can explore at that point. Even that's difficult to do. Other things are missing handrails on stairs. That's the other biggest one we run into. But we've run into all kinds of silly
cracked windows.
But a big misunderstanding too with that is even on conventional financing, there can be condition requirements.
There can be.
And I think people go, oh, well, it's a conventional loan, doesn't matter. We'll just go with a conventional loan because it doesn't matter. Some of those things like handrails, the biggest thing I've noticed in the last year is that appraisers are clocking houses that have open staircases. Even for conventional financing. Oh, it's conventional financing. Yeah, you still need to have a railing with balusters so nobody falls off. Because even a 2-year-old, they walking up those stairs, they're going to fall off. And I think about it when I was a kid, the house that my grandparents lived in when I was a kid had an open staircase on one side. And in my life, I never thought about falling off of it. But man, I think now and I go, oh, I definitely could have fallen right off of that staircase.
My grandparents had this floating staircase where each step came out of the wall and it wound up with no handrails or anything, and there was physical gaps between each step, and I would jump through I've always loved that staircase, but I can never have it now because
that
can't exist anymore.
And so I mean, for those listing agents out there that are going, well, we're not going to accept a VA offer because of
that's going to get flagged on
a conventional offer is you're still going to get flagged on some things,
that's not straight cash.
Yeah,
it's going to get flagged on.
I think I think a lot of the strangeness with it too comes down to the fact that there's a human element because an appraiser is not a robot. It's someone who's physically going to look at everything at the property. So
Correct.
sometimes they'll be very, very stringent, and sometimes they'll look at things a little bit more realistically. That's not to say there's. Go ahead.
I'm going to preface this by saying I love appraisers and they're wonderful people and they do a very important job.
Here's the rub.
Also, they're odd critters, and sometimes you get the window guy and sometimes you get the paint guy or the driveway gal, and that's the thing they focus on, and the rest of the house could be unsat.
Yep.
But if they're only focused on doorknobs, then if the doorknobs are good,
we have seen that several times where it's like this house is going to be tough for VA,
No,
and then it's one or two weird things.
Yeah,
and
they're like, I don't like
nothing
this door
else gets
latch
flagged.
on the storm door.
I think the most important piece, for everyone involved, for listing agents, for buyers agents, for buyers and for sellers, is to think about it as, okay, there's probably going to be a little thing that needs to be fixed here or there. But most likely, we'll call a spade. There's probably going to be something that needs a coat of paint on it. However, is an hour of time with a paintbrush something that's reasonable to prevent someone from buying a house? In my view, I think we're all in agreement, that's nuts. And we can the conversation about whether the minimum requirements should be what they are is a whole separate thing. Where I don't think we'll get into that, because that is what it is. The federal government's going to move at the speed of molasses with that. Everyone pretty much knows that, especially veterans who are involved. We're all very familiar with exactly the rate of change, but having a plan and having solutions available ahead of time is super critical for something like this, because we all have someone we work with who can get work done prior to closing and can be paid on the closing statement from the proceeds to get it just taken care of so we can get to closing. Because if it's just a little bit of paint, if nobody has time involved has time to fix something like that, having a resource that can take care of it for nothing out of pocket up front, I mean, that's huge. And that solves the problem entirely. I mean, that's a huge aspect of that.
Yeah.
Because, go ahead.
Communication, like between the buy side and the sell side, as long as we're aware of the same problem and we're aware of what the solution looks like and we are all pointed in the same direction and want to close this together, kind of not an issue.
100%.
A railing will get put up or a deck will get painted. It's not life-altering.
I cannot remember the last transaction. Have we ever had a transaction fall apart for minimum condition requirements? I don't think we have.
No.
I don't think that has ever happened. No. There's a bump and you get through it.
Yeah.
I'm just thinking of there's been some crazy things that have come up.
I mean, we've had deals that fell. I mean, we did have one that fell through because of some issues, but it had nothing to do with the appraisal.
No.
Yeah. 100%.
I mean, I think you're probably, what I'm talking about, but some major stuff that popped up, but the appraisal actually didn't even note it. You know what I mean? So, I mean, in the end, I always encourage people to take VA offers. I mean, obviously, you're going to take the best offer that's presented to you. If the VA offer is offering way less money than another offer, no brainer, you're going to take the other offer for more money probably. But if you've got all things being equal and it's a VA versus a conventional or a VA versus FHA or a VA versus... The VA loan is just as good as anything.
100%. And as long as there is, there's the issues that can come up with appraisals. But if you have the most basic plan written on an index card, it's not complicated to fix that when that comes up.
Correct.
Then it's a non-issue. I think the other piece of the appraisals we should talk about, which is also important, is the reconsideration of value that VA loans have, because other loan types don't necessarily have this in this process.
Well, there's two different things with appraisals, with VA appraisals, that are not around with other ones. So the first one, so you have an appraiser that goes out to a property and they look at it and they say, okay, they're buying it for $400,000, let's say. And that appraiser looks at it and they do all their numbers and they go, this is only worth $370,000. They're going to do something called, they're going to invoke Tidewater. Which what that means is that they're going to actually reach out before they present their the report, and they're going to go to the listing agent and they're going to say, hey, do you have some comps that support this value? Because I'm not finding them. And they're going to give that listing agent the opportunity before they ever do their report to support the value of that property.
And typically they reach out to the buy side as well.
Right. They're going to reach out to, really anybody involved and say, let's see what we can do to show me the comps that supports this value.
Yep.
Because I'm not finding them. And that just might mean that they just didn't find them, right?
Yeah,
you might
a
have
dialogue.
them. Right. So they're going to have that conversation because the appraisers are also not out there trying to kill deals. They want to get that value so you can move forward.
Yeah,
so,
they're not trying to prevent you from buying the house.
Right, exactly. So with VA specifically, they have this thing they set up called Tidewater where you're actually, you're going to come out there beforehand. They're going to say, hey, I'm not finding the value. Help me find the value.
Yep.
So you're going to have that opportunity. Let's say that doesn't happen. Or they don't invoke Tidewater. They can't figure out. You have what's called a reconsideration of value after an ROV. So when it comes out and it's under value, then you can request a reconsideration of value, which does pretty much the same thing. It's saying, okay, show me the comps, figure it out. So there's a before and after options for the appraisal to meet value, which is not as readily available for conventional or FHA or USDA loans.
Interesting.
So
that's something we don't think about a lot. It's not, I wouldn't say it's crazy frequent that we bump into that circumstance, but when it does, VA is the only one where we really have much of a chance in that.
Yeah, well, and in the end, because they have it set in the programs because they want to make homeownership accessible for veterans.
Yep.
That's like their North Star.
Exactly. They want it to be easily accessible. I mean, you hear in the news all the time, homeless vets and under housing for vets and all this kind of stuff. Okay, well, this program makes it accessible.
Absolutely.
Just makes it accessible for veterans to have home ownership, to create generational wealth through home ownership and all those things through this program that otherwise they might not be able to buy a house.
Absolutely.
You know, I mean, some of the other things about VA loans, I mean, their VA has no minimum credit requirement. Now, lenders have a minimum credit requirement, right? So lenders all set it. So it's going to be different by lender. But, I mean, I have a program that I can go down to 550 credit score.
Wow.
For a VA loan. You know what I mean? It depends on the lenders and what they will allow. Mind you, there's some caveats to it.
Of course.
But credit is not an end-all be-all with a VA loan like it is with a conventional loan or even an FHA loan to an extent, right? They have a lot more lenient credit requirements. So you have some bad credit history. They're not going to care about that as much as you would with a conventional loan.
What does it look like with debt to income on a VA loan?
There is no maximum debt to income ratio that the VA sets.
So,
now, again, lenders are going to set their own requirements, and it has to. So when we do a VA loan, we're going to go through and we're going to figure out all the numbers, and then we're going to send it into a system. It's what we call it, an automated underwriting system, or AUS, that through Fannie Mae or Freddie Mac, and they're going to give us kind of a what they call findings on that loan. It's an algorithm. You put it through, and they have their systems and stuff, and it figures it out, right? If I can get that to come back saying that they're eligible and they'll accept that loan, generally we can do that loan. I've seen VA loans come back with 60 plus debt to income ratios.
Wow.
Now, is that a good loan to do? Maybe not. You might be setting up the veteran to fail, right? Because you're using a lot of their income toward that. But if I know that maybe it's them and a spouse, and the spouse isn't on the loan, but they work. Yeah. So we know there's more income. We're just not using it for the loan. Certain things like that.
The real debt to income.
The real debt to income might be different, but we can't use that spouses because they just started their job or because you know whatever the case may be. Then I might say, okay, we're going to work toward this, right?
Yeah.
Yep. I mean, it's not the situation where we're really pushing them to the limit, because the last thing I want to do is put anybody into a house that they can't afford. Of
course,
right? Yep. Because there's something called that. It happened back in the early 2000s, and we had a meltdown of the financial system over it. So I don't want to be that guy and put people in a house they can't afford. But at the same time, the VA has very lenient guidelines on this. So as long as overall there's compensating factors, also you can get an approved for a pretty high debt to income ratio. Now again, lenders are going to have their own caps, right? And that might vary between programs.
Yep.
New Hampshire Housing we talked about. So their only requirement is that if the debt to income is more than 50%, you need to have at least a 680 credit score.
Which means, I mean, realistically, let's just take the median household income in New Hampshire is like 96, 97,000, something like that. So call it goodness, I'm doing math live here. $8,000 a month. Is that what that works out to? That means you could do $4,000 a month just on your housing payment. Not saying that's advisable. Not telling anyone what to do here.
Right.
But that would allow you to do that
Correct.
through that program.
Correct.
So I mean, that's a big deal.
Yeah. I mean, again, it just goes back to the VA is trying to make homeownership accessible for veterans.
It's weird. The top line, like if you just glance at it, it doesn't look like it's that much better than FHA or something because it's a 3.5% difference. Okay, well, what is that? You know what I mean? But when you look at all of the details, there's like a million little things that add up to make it.
VA has a lot of wiggle room with certain things.
Yeah.
A lot of wiggle room.
And other loan products, I feel like, are pretty cut and dry.
Correct.
It's either yes or no. And
Correct.
VA is...
And it's very explicitly spelled out what you get.
I mean, the VA has some things that are hard and fast. I mean, there are people that I have not been able to qualify for a VA loan.
Oh, yeah.
You know, it happens.
Yep.
But that person probably was never going to qualify for conventional.
They're not going to qualify for a conventional or an FHA loan either. Exactly.
Yeah.
If you're not qualifying for a VA loan, you're probably not qualifying for anything.
Yeah.
But in the end, it sets it up that there are so many benefits to a VA loan. I mean, that's why if I can qualify somebody for a conventional loan and a VA loan, sometimes I'll say, okay, we're going to qualify you conventional too, just in case you need that to buy the house, right? Because sometimes, you know, they need a conventional loan to compete.
Yeah.
Because that we have that stigma out there, right? So I'll qualify them for the VA loan, but I'll also qualify them for a conventional loan because they're just, you know, good enough buyers to do so. They have enough of the, you know, positives on their end. So we do that, and then we'll go, you know, they might get under contract with a conventional financing, and then we say to the listing agent, hey, listen, they qualify. We can do this loan conventional, but it's going to be a lot better for them if we do a VA. Can we do a VA?
Yeah. No, we did skip something. I just remembered we skipped a piece of the process a little bit earlier on. That's VA required inspections.
I was thinking of those.
Yeah. So there's two of them for New Hampshire.
So there's exactly. We have a water test and a pest inspection. Now, the pest inspection is only required in some counties because the northern counties, they do not require it.
If you're south of Concord, you need it. If you're north of Concord, you might need it.
And pest inspection does not mean there was a mouse in the attic 5 years ago and there might be evidence in the insulation or something.
The mouse is probably still there.
They're looking for termites.
Right. That's really what they're looking for.
Yeah, they're looking for termites. And newsflash, we're in New Hampshire.
We don't really have termites here.
So
that's
New Hampshire, Maine, not a big termite area.
Never seen one.
That is as close to a rubber stamp inspection as you will ever see. And most of the providers around here do one of those for free with a general home inspection.
Yeah, oftentimes they will.
Yeah.
Yeah, they'll do a quick, easy one. It's just part of your home inspection. They do it free for vets.
And there's
the
a
water
specific
test.
form.
The water test is a little bit different. There is a water test that's required. There's 5 primary pollutants that get tested, and that is a requirement if you have a private well. If you're buying a house in a city or somewhere that has public water, you don't have to have that test done.
Pollutants do not include radon.
Correct. It's nitrates, nitrites, total coliform, E. coli, and lead.
So things that will kill you.
I'm not going to pretend I know what the difference between nitrates and nitrites
I don't
is.
either. I just know those 5.
My wife's going to make fun of me for that with all their chemistry education, but so it's stuff that's more important for the water test.
Water test is also, correct me if I'm wrong, if it's on public water, not required. If it is on private water, it is required.
Right. If you're on a public water system, then you don't have to have it because that gets tested anyway. And that gets treated. But a private well, anytime you have private water, it has to get tested.
Yeah. And it's I think that's pretty reasonable. It's an important thing. You know, we've seen plenty of water tests come back specifically if it's a dug well, an older style well,
or like been vegan for a long time.
Yeah, bacteria in the water. It's like, hello, that's important.
Yeah, and if you do the test and it comes back with bacteria, you shock the well and you can do retesting.
Yeah, absolutely.
Yeah, it's also again 9 times out of 10 not life altering. You just get it cleaned, shock it, run the water. Yeah. It's good.
There's relatively inexpensive filtration systems nowadays too.
Yeah.
I've seen them
you
as
get
low
a
as
UV filter, super cheap, and then takes care of the bacteria.
Yeah,
Done.
absolutely. Yeah. I've seen installed like within the same week for less than $1,000.
Easy.
Granted, that was 3 years ago, so that might be $1,200 now. But
whatever.
Still,
no, but you can easily, if you find, but you just has to be fixed before the closing.
Exactly.
Right? And that also means if they decide, okay, we're not going to shock it, we're going to put in a UV system. You put in the UV system, we retest the water, we're good.
Now, I think this is an important detail because I've bumped into this issue before. For a VA water test, there are requirements to how it's done. You can't just pull the
You don't
water
do it
test yourself.
Right.
No.
It has to be done by a third party. So generally, you want your home inspector to do it.
So that there's a chain of custody for the water all the
Yep.
way from the tap to them bringing it to the lab.
Right.
They are pretty
Special
picky on that.
container and
They don't want you pouring a bottle of Poland Springs in it and taking it to the lab and saying,
Correct.
"See, it's good."
Correct.
But-
Yeah. So it has to be a professional.
Yeah.
So you either have a water company come out and do it, or you said your home inspector can do it.
I think
Just needs to be a third party that's separate from the transaction.
I'd say in general, your required VA inspections are pretty much always going to run you less than $500. I think you'd be really hard pressed to find someone who's going to charge you more than that for a water test and a pest inspection.
Yeah, usually the water test, it's an add-on to your home inspection, $150, $200 at most.
Yep.
So
And that's another important point of differentiation is that a VA appraisal, you'll hear people say VA inspection.
not an inspection.
No, just as an example, they don't care what condition the heating system is in as long as it's heating.
yeah,
So the heating
it
system
works.
can be 45 years old and on its last legs, but if it's pumping out heat, you're good. And a home inspector isn't going to look at it that way. They're going to give you more recommendations. They're going to look at it in a little bit more depth. The whole rest of the house.
home
So,
inspection is super important.
yeah, VA appraisal is not the same thing as an inspection. So that's an important
Correct.
thing to note. I had the misconception in the past that they required a septic inspection, which is not the case. There's wording where if the appraiser notices that something seems like it's failed, then they can require it to happen.
Yeah, but that's the case with any loan program.
Exactly.
You know, like
That's
an
not you.
appraiser on a VA loan, FHA, conventional, anything is going to go in. They're going to flush the toilet. They're going to run the water.
Yep.
If they're getting a smell, or if if it's not draining fast enough, they might say,
Or if the yard's a
"Hey,"
little mushy.
right? They might say, "Hey, you need to get this checked."
Yep.
But they're never going to require. They're just going to say you need to get this checked. And the same thing with any of that. I mean, if an appraiser's never going to say you have a mold issue, you need to have it taken care of. An appraiser's going to say, I noticed potential for mold. You should have somebody come look at it.
Yep.
That's all the appraiser. Appraiser's not a mold expert. They're not a septic expert. They're not an expert in any of those things. They're an expert in appraising properties.
Yep.
So anytime that they're in there, they're questioning something, they're going to suggest you have somebody that is an expert in that field come out and look at it.
The primary function of an appraisal is just to determine the value of the property.
Determine the value and make sure it meets minimum property
Check our
standards.
condition requirements.
Correct.
100%.
Exactly.
I think there's a lot of people who think about that, like the way people talk about the VA loan in terms of property condition requirements, the appraisal, the inspections. It is confusing with the way it all adds up for the different pieces of the puzzle.
It can be,
it's-
and that's why you hire people like yourselves that know what they're doing to walk them through it.
Exactly.
Right.
There's a certain, and I always encourage this for everyone. This is not a plug for me. Talk to anyone, but don't just try.
It's a plug for Orion.
Don't just try and Google these things. Talk to somebody who has experience in it, because oftentimes it is a lot more confusing to try and piece all the bits of the puzzle together.
Right.
Here's something easy. Realtor, lender, let's do a rock drill. Just walk me through. I'm buying a house VA. What do I do?
Well,
What does the process look like?
Well, first you need to get pre-approved.
Yep.
That's your,
Pre-approval is the first part of the process. So yeah, you come to me. I do that. I pull that certificate of eligibility from the VA site to see, are you eligible for it, and to see if you are required to pay that funding fee.
Yep.
Right.
What documents do I need to have ready for you?
Pay stubs, or an LES if you're still active duty.
If you don't know what that is, you don't need a VA loan.
You don't exactly. If you don't know what an LES is, you don't need a VA.
Okay.
Exactly.
Yeah.
Still get those emails years later.
You need W-2s for the last couple of years, and then bank statements to show what funds you have for the closing costs, right? Because you're doing a zero down. I don't need to see funds for a down payment, but I still need to see you have funds for the closing costs.
Gotcha.
That's the basics right there.
So I give you the documents, you issue the pre-approval.
Yep.
From there, I'd say the next piece of the puzzle is the normal stuff of having the conversation, narrowing down your criteria, figuring out the nice to haves versus the must haves in terms of for your property, really going in depth on the minimum property condition requirements so we can be on the lookout for them, and getting a plan in place to fix those if they come up, and being able to, I'd say even more important than the plan itself is being able to articulate it to the listing side of things. Because if I just come and say, I'll put myself in the listing side. If I have someone just come to me and say, oh yeah, the buyer will fix it, no big deal. It's like, well, that doesn't mean anything. That's not a contractual obligation. Versus if it says the buyer will pay for up to $5,000 of VA required or something like that if it comes up. Or that's just one example that I've seen. There's a million different ways to do it, but make it something solid and clear.
Right. Well, and that's what makes it super important. Like whether they work with you or not, I would really recommend if you are a VA buyer, work with a realtor and work with a lender that knows VA loans and knows the ins and outs about them.
Absolutely.
I mean, that really comes down to it. It's a very specialized loan program. A lot of lenders do them. A lot of realtors will work with a VA buyer, but whether they actually know those ins and outs and are able to, like you said, articulate this is what is needed to get you under contract and to make the seller and the listing agent feel confident in accepting your offer.
I will point out as well that when you're picking who you're working with on the financing side, this is another misconception. Like we talked about a VA loan, there's the VA loan, and every VA loan is guaranteed by the Department of Veteran Affairs for the lender. Not every lender has access to the state housing programs. That's a huge deal.
True.
So just because you go to an online lender or something and say, oh, VA loan, 9 times out of 10, they don't have access to New Hampshire housing or Maine housing.
Right.
And
I mean, New Hampshire housing's rates, I mean, I'm not going to quote specific rates on here because I'm sure that, compliance crazies will go all over the place. But you can generally expect like their Home First program to probably be a whole point or more lower than what the average market rate is on a VA loan.
I won't say numbers to make anyone mad, but every time I look up New Hampshire housing's rates with my cup of coffee first thing in the morning, puts a big smile on my face every single day.
So we put in an offer, we get under contract. What happens next?
Well, what happens next is we go through the inspection process, right? So we start that due diligence period. So then we have to get the inspector in there. We do that water test. We do the pest test if it's required. On my end, I'm working with them to gather any other documents that we might need to get them into underwriting.
Because pre-approval and loan approval
are very different things.
Yep.
Nope, they're not different things. Unless you ahead of time did on my green light program, which we can talk about on another episode. But yeah, so they have to go through that. So they're going through the underwriting process at that point. I mean, if I've done my job, which I like to think I do, it's a pretty easy process because we've already done a lot of it ahead of time.
I'm gonna use an analogy for the underwriting process. It's like the security clearance interviews.
Yep.
That's kind of what it's like. They're picking your situation apart to make sure that all is as it seems.
Yeah, exactly.
There's no skeletons in the closet.
Exactly. They're just confirming all the details of it. Yeah. But in the meantime, you're getting those inspections. You're getting the water test done. You're having the pest test done. We're ordering the VA appraisal, so they'll be going out pretty quickly to appraise the property. And that whole part goes through. Once we have the appraisal back, that goes back to the underwriter to double check and make sure that the appraiser did their job properly. So the underwriter's signing off on that. We have title work done. So they're doing a title search on the property to make sure that what liens are on the property, who actually has ownership, is the person that's selling it, things like that. That all comes back, and then the underwriter approves it all. We approve the loan and work toward closing date.
Yep, 100%. It really. That makes it seem pretty simple, all things considered.
It is. I mean, the fact is, it is pretty simple. Yeah, there are a lot of moving parts, but again, you're working with somebody that knows what they're doing. It makes it very simple.
And there's chaos. It's you're working with someone to manage the chaos.
Right.
And, yeah. By the way, the only people involved in this process who have to be good at it is like us. You don't have to be good at buying a house because you don't do it every day.
Right.
You just need to basically follow instructions, trust the process, take all directions from the tower, and then
exactly
it'll happen.
Yep. Yeah. You just need to run the lane. Essentially, it's not like it's not.
Don't worry about the ammo draw. Don't worry about all the background stuff, the risk assessment, all that. Just scan your lane, do the thing.
Yeah. Just get me what I need, get you guys what you need, and you're good to go.
100%.
It's very simple.
There's a lot of in the process. The piece we did skip over a little bit is that during the underwriting process, there is a lot of sitting on your hands and waiting. Hurry up and wait.
There can be. There can be a lot of waiting. And it just comes down to...
It's just part of the process. It's not a bad thing. It doesn't mean anything's wrong. But
no, usually I always tell my people, if you're not hearing from me, it's usually a good thing.
Yeah.
You'd rather not hear from me. If you're hearing from me a lot, it means there's a lot of issues that we're dealing with that you're helping me with. So
I'll be honest,
if you're not hearing from me, it's a good thing.
I love you to death, and every single time I see you calling me, my heart drops for a second.
Yeah.
And I'm like, oh, wait a minute.
That's why I try to call with good news sometimes too.
Oh, it's the week of Christmas. We don't have anything under contract right now. I shouldn't be nervous that Bill's
just calling you and wishing you a Merry Christmas, man.
Bill, what's wrong? Why are you calling? No.
And I'm sure that's the case with a lot of people. They see my number come up, they go, "Oh God." If it's any consolation, when my processor calls, usually I say, "What's wrong?"
Happy to see.
Or she'll say, "How are you?" And I'll say, "It depends on what you're telling me right now."
You hit me with that one all the time. You're like, "How are you?" I'm like, "Oh no."
Yeah. No.
My day gonna get worse.
But the VA loan process, there's more nuance to it than people realize.
Yeah.
It's not scary. It's not as scary as a lot of people make it out to be. I think we've pretty much covered the entirety of the process.
Yeah, I
factors.
I want to mention just really quick about we could talk about the Earl earlier on and just refinancing, which I know has less to do with you guys and more to do with me.
Is Earl in the room with us right now?
Earl's behind the camera. So again, the VA Earl, it's a interest rate reduction refinance loan. It's a streamlined refinance. So for most veteran buyers, that's what you're going to, unless you're looking to pull equity out of the house and you this is the loan program you're going to do to lower your interest rate. So if when you see the interest rates are lower or your lender sees when interest rates are lower, that's a program you're going to work with. It's a streamlined program in that you don't need to show income. We're not worrying about your debt. We're not worrying about any of that. You just need to show that you're currently employed.
Interesting.
That's it. That's it. So for instance, so for you, when I did your VA Earl a couple of years back with those stupidly low interest rates, all you had to show me was, I think you had to show me a recent commission statement, if I remember correctly. It was just something to show, yes, you're employed. I didn't care how much commission you were making. I didn't care if it covered the bills, because here's the thing the VA says, and this is another thing that's rare with the VA when it comes to refinancing. If I'm refinancing a conventional loan, it's like you're buying the house all over again. You're showing me absolutely everything.
Interesting.
With a VA Streamline or VA Earl, you don't need to prove that you can pay it, because the fact is you're already paying the mortgage. If I'm lowering your payment,
and that's making the situation better.
Making it easier. We can either keep the loan as it is and you keep making the payments, or we can make it lower. They're not expecting that you're not going to make those lower payments since you've been making the higher payments all along. So we're not worrying about that. We don't need an appraisal done. We don't need any of that. It's going to be a simple, quick process.
That explains a lot, because when I'm thinking back on it, and granted, that was 2021.
Yeah, you weren't even 2 years into being a realtor. Normally, if you're self-employed, like as a realtor is, you need to show a 2-year history on your taxes to buy a house.
My entire memory of that refinance process, which this explains why, because I've thought about
emails.
It. Well, no, it was you called me and told me I needed to do it, and then my wife met Jean Marie for the first time when we were signing the documents for it. That's my entire memory of that process. That makes a lot more sense now.
Jean Marie was the title closer that didn't get the closing.
Yeah, exactly.
That's exactly. I mean, a VA Earl, or sometimes people hear of it as a VA, rate reduction or a streamline, is super fast, super easy, super quick. That said, there are a lot of predatory lenders out there, and especially right now, I'm dealing with it with multiple VA homeowners that I've done loans with in the past that will reach out to me and say, "Hey, such and such a company reached out and they're offering me this amazing interest rate to lower it." But look at that loan estimate. I'm telling you right now, look at the numbers. Call me up, send it to me. I don't even care if you do the loan with me or not, or a trusted lender that you have them take a look at that loan estimate, because a lot of lenders, that they're dying for business right now, and they can get you a lower interest rate, yes, but is it worth it? And that's me across the board for any refinance, but for some reason I think right now they're almost like targeting veterans.
And when you say worth it, you're talking about how the cost
benefit, right?
Yeah.
How much are you lowering your payment to how much are they charging you in fees to do that loan? I just had one very recently. They said, "Oh, I can go from 6.5% to 5.625%." It's
only $40,000.
It's a pretty good difference. Well, no, this was a specific situation, right? I'm not quoting rates. I'm saying this is what they were being told.
Yeah.
Great. Well, that's a pretty good difference here. I don't necessarily think it's enough of a difference, but for this person, it was going to save them a few $100s a month. That could be a good difference. I said, "Send me the loan estimate." So I took at the loan estimate. They were charging them $10,000 in buy down points for that rate.
Wow.
Plus a $3,000 origination fee. So $13,000 that the lender was charging to do this loan. So when you say, okay, $13,000, divide that by the savings, it was going to be like 8 years for them to recoup that cost. Do you think, I mean, we don't know for certain, but do you think in the next 8 years that rates might go down from where they are right now? I think they will. You know, a refinance shouldn't cost you more than a few $1,000s.
Yeah.
And if to be paying all this extra money to lower your rate, I mean, if you have to, you have to. If your budget's tight and saving $150 a month is going to help your budget, you do what you got to do, right? But long-term financial success tells you you're probably not better off refinancing if you're having to pay points to do it.
Yeah, absolutely.
You know, not that many points, especially.
Absolutely.
You know, so just be really careful because for whatever reason, and it's terrible. And I've spoken with another lender friend of mine that does a lot of VA loans, and she and I were on the phone the other day lamenting about this, that there are certain lenders out there that like to pretend they're the VA that will you reach out and say, hey, this is a great opportunity for you to refinance with this EARL program, right? Yep. This rate reduction program. It's quick, it's streamlined, it's easy, no appraisal necessary. No, we don't need to show your income, nothing, which is true. But now we want to charge you $13,000 to do this.
Yeah. If you're paying points, that means the rates actually aren't that much better.
No.
You're just,
and I'm telling you, and this particular person, 6.5%, a pretty darn good rate right now.
It is.
At 6.5%, I think it's a darn good rate.
I think it's important we define terms. So a point is 1% of the loan amount?
1% of the loan amount you're buying down. It doesn't mean that you're lowering the interest rate by 1%. Yep. It's you're paying 1% to lower the cost of the rate. So
if
again,
we have
they wanted to charge them, pretty much they wanted to charge them 2 points, so 2% of their loan amount to lower the rate less than a point.
Yeah. That's
yeah, it's just
painful.
And I see it a lot, right? So I would say for those of you out there that want to refinance, I know there's so many people that are itching to refinance to get a lower rate. Believe me, I want you to refinance too. I want to refinance you. But I can't sleep at night and live with myself if I'm charging somebody thousands of dollars extra just to do a loan.
And sleeping at night is pretty cool.
Sleeping at night is pretty cool.
Awesome.
So I would just really recommend if you have an online lender or somebody that you don't know, if your personal lender that did your last loan is reaching out to you, hopefully they're an upstanding person and they're going to do right by you, right? Yeah, but if you're getting solicitations to lower your rate, it's probably too good to be true.
Yep.
And just be careful. That's my whole big thing. Just be careful because there's a lot of predatory lenders out there that are just out there to do the loan, and they find that a VA EARL is low-hanging fruit because it's easy.
Yep.
It's very easy to do, but when you all of a sudden now have added to your loan balance $10,000 or $20,000, is it worth that half a point?
For most people, it's not.
Probably not.
Yeah, if there's any room to extract money, sometimes somebody's going to find it and they're going to make it seem.
It's true.
You know.
One of my favorite things I have past buyers that'll send me a screenshot of a letter they got in the mail that says access your FHA benefits, and it's just telling them to refinance.
Give me money.
It's just telling them to refinance. They don't FHA benefits you're accessing. It's just accessing equity that you have in your house.
Yeah.
Is it worth it though? If you look at the fine print, usually they're charging multiple points to do it. You know, can we lower your rate? Yes. Is it worth multiple points? No. The average refinance, $3,000 to $4,000. A VA refinance for that, like that EARL, should be even cheaper than that.
I should start sending you pictures of the mail I get with that. I get like 3 things a week.
Probably. Most people are. You know, so this is my public service announcement right now. Just please be careful when it comes to those solicitations for refinances. I promise you it's going to happen. We'll have another refinance boom to get people out of these 7-8% high sixes rates that they're in. It's going to happen. It's just we're not there yet.
Yep.
Be ready for it, but we're not there yet.
Yeah,
so hold on a little bit longer.
We've been saying in 18 months it'll be
there. Yeah, in 18 months it'll be.
For 18 months it has been. In 18 months. But
we will. It 100%.
It will happen. It will happen. I mean, I wish that we were in the 5s now. We're just not. So keep an eye on it. Now, that said, if you want to buy, I can get you a VA loan probably in the 5s with New Hampshire Housing. But I mean, just hold on a little bit longer to refinance.
I generally find anytime someone's telling me to not spend money on something that I should listen. So
yeah, and tell you, I mean, and me saying this, and I'm a person that I make my money by doing loans. So I want you to refinance or buy a house. I do, but and I want you to buy a house definitely, but I want you to hold off a little bit longer on refinances.
Yep.
Unless you just want to give Bill money.
I mean, if you want to, I'll do the loan. I'll do the loan
to give Bill
but
money.
I'm gonna try to talk you out of it first, probably.
Well, I think that's probably a good place for us to wrap. I think we've hit all of the wave tops in terms of the VA loan process. We'll probably do more. It sounds like there's some updates coming in the future, possibly with both minimum property condition requirements and a few other things related to VA loans. So I'm sure we'll have maybe in a year or two, we'll have a part 2 to this with some changes, keep everyone updated. But this has been great.
Yeah. Thanks, Colin, for joining us.
Yeah, I love it.
It's awesome. We're glad that you're here with us. This is
thanks for having me.
See you on the next one, guys.
Bye-bye.